Welcome to this video, which is about long-term investing. Hello, I'm Peter Martin with Trading 212, and I thought I'd talk a little about long-term investing in the stock market, which is also called the buy and hold approach. Now, long-term investing tends to have a general appeal compared to more specialized or shorter-term forms of investment. Now, one of the reasons that it has this general appeal is that it doesn't require any particular skills in terms of timing. Long-term investing is not about negotiating the short-term vagaries of the stock market. It's more about investing in a business in which you have confidence, in a business that you understand, and the belief that doing so gives you a decent chance of growing your investment in the long term. Now, one of the most famous practitioners of the buy and hold approach is Warren Buffett, and I'd like to read to you a quote that quite succinctly gives an insight into his approach to this, and the quote goes as follows: "When we invest in stocks, we invest in a business. You simply have to behave according to what is rational rather than according to what is fashionable." And when he's talking about investing in a business in a rational way, when we're talking about investing in a business for the long term, tying up our funds in that company, what is rational? Well, we're talking about companies that are stable, that have a long proven track record of generating money, companies that are economically robust enough to withstand a few lean years or to withstand economic shocks, as opposed to, say, a company that's been around a few years, that's grown very rapidly, that may hold a lot of debt and may not have a very large balance sheet and has no long-term proven track record of generating money. Now, the growth companies are great for certain investors. They may very well suit certain types of speculation, but in terms of tying your funds up in the long term, it's not really the kind of rational approach that Buffett is talking about there. Now, when we invest in a business on a long-term basis, it's not a case of putting your money in and just forgetting about it, but there is less of a commitment in terms of what is required in checking your positions, certainly on a day-to-day basis. Probably all that may be required for most people is periodically checking that nothing fundamentally has changed to alter your view on the companies that you hold. I'd just like to finish with another quote from Warren Buffett. And while his approach to picking value in stocks is probably quite complicated, what I like about this quote is how it boils down to the very essence, his approach to the stock market. And it involves hamburgers, of which Mr. Buffett is famously very fond. And it goes as follows: "When hamburgers go down in price, we sing the Hallelujah chorus in the Buffett household. When hamburgers go up, we weep." For most people, it's the same with everything in life they will be buying, except stocks. When stocks go down and you can get more for your money, then people don't like them anymore. I hope you enjoyed the video. If you did, please hit the thumbs up button and give us a like. Or if you've got any feedback, why not send us a message in the comments section. We do read through every message that comes in there. And we'll be putting more of these videos about investing on YouTube in the future on a regular basis. If you hit the alarm bell icon, then you'll get a notification the next time we upload a new video. But that's all for this time from me, Peter Martin, and Trading 212. Thanks for watching. Goodbye.